Hello, hello. Welcome, welcome. Welcome to the YouTube Live. We'll get started on Facebook in just a second. Welcome. My name is Amma Nancy. I go by Amma the CPA. Good evening, millionaires. I hope it's not blinking like that. Welcome to the call. Welcome to the call, millionaires. Welcome to the call. Welcome to the replay. If you guys are just now joining us, welcome to the replay. My name is Amma Nancy. Good evening, millionaires. Good evening, millionaires. So this is the segment that we do that's called Good Evening, Millionaire. And what we do is we go over financial literacy tips. I do believe each one teach one, we can change the world. My name is Amma Nancy, and it's not important to me. I go by Amma the CPA, right? And that stands for Certified Public Accountant. That's the highest level that you can achieve in the field of accountancy, right? I'm very proud of that. It took me a really long time to pass that exam, and there you have it, right? So I'm a CPA. I go by Amma the CPA, and it's not important to me how you make a living, right? What's important to me is what you do with it, and that's your life, okay? So that's what's important to me. So I'm always here to help. However I can help you, definitely feel free to reach out to me. So we have this segment that's called Good Evening, Millionaires. So good evening, millionaires. And what we're going to talk about is different financial literacy tips. I do believe, like I said, each one teach one, we can change the world. So tonight, okay, I'm talking about the biggest tax reform in my whole life. The biggest one in my whole life. The biggest one in 31 years, millionaires. This is crazy. So before we get started, please go ahead, give me a share. Good evening, millionaires, and give me a share. And make sure that you guys put in the comments like where you're from, right? Where you're calling in from. So I see we have some millionaires from Philly. We have millionaires. I see Mrs. McKinney from Grand Rapids, right? Welcome to the call. Welcome to the call. We got Tracy Brown. Shanae Alexandra, welcome to the call, millionaires. Welcome to the call. So do me a favor. Miss Connie, hey, millionaire from Philly. Miss Brittany from Philly too. Do me a favor, millionaires. Go ahead and put in the comments. We got Ricky Rollins, good evening, millionaire. Kristen Campbell, good evening. Shamika Jones-Smith, good evening, millionaires. Darren Perkins, good evening. Hey, Shannon, right here from Chicago, right on King Drive with me. Hey! Okay, so we're going to go ahead and get started. What I want to talk about is, like I said, the biggest tax reform. And thank you so much for the shares, millionaires. I really appreciate it. Thank you for the shares. So we're going to go over the biggest tax reform in 31 years, right? And we're going to go over how it's affecting the middle class. It's a lot of things in this tax bill. I think it's like, over 400 pages. Now, I didn't have to read the whole thing, but, welcome to the call, millionaire. Welcome to the call, right? But I wanted to just kind of go through and give you guys my perspective on it, the different things that I see that will directly affect the middle class, right? Most of my family and friends, all my millionaires, right? We are all millionaires. We just wait on our bank account to catch up, okay? So until our bank account catches up, right now we middle class, okay? So we just waiting on our bank account, and it's on its way though, right? It's on its way. It's catching up. It's catching up. So remember, we always greet each other by millionaires because everything happens 3 times. Once in your mind, right? First in your mind, second on paper, and third in execution. So you have to be a millionaire in your mind first, okay? So that's why everything we do is millionaire minded. Good evening, millionaires. Good morning, millionaires. We always greet each other by millionaire, okay? So we're going to go ahead and get started. Give me a number one. Oh no, before you give me a number one, okay, wait a minute. So what I want to say, like I said, it's the biggest tax reform in 31 years, right? And typically, just to give you guys a little bit of background with the government, some of you know it, maybe some of you don't. I just want to say it just to make sure. Typically, the government gives us incentives and tax breaks for the things that they want us to do. So for example, a lot of you guys know you get a tax break for having a home. You get to write off the interest. You get a tax break for the interest that you have for your student loans, right? So they want you to buy a home. They want you to go to college. You get a tax break for when you have children, right? Because they want you. Good evening, millionaire. Hey, Latanya from Chicago. Because they want you to have children, right? They want you to help, populate, right? So you get a tax break for that. And then, of course, that goes with having more workers, right? So you get a tax break for that. So think about the different things that you get a tax break for, right? Of course, we know you get a tax break for having a business. You get a tax break for, they had tax breaks if you made your house like environmentally friendly, right? So they give you tax breaks and incentives for the things that they want you to do. So you can always, hey Quincy, you can always see what the government wants you to do based on the tax breaks and the tax incentives. Okay, so I don't want anybody to look at this stuff that I'm going to go through as like, oh, it's against us or something like that. Just look at it as the government is trying to incentivize us for what they want us to do. Okay, now a lot of it is kind of shocking. It is a massacre, so to speak, but it's okay. It's okay. We can definitely get through it. And like I said, I'm always here to help. Another thing that I do want to point out, so they kind of voted this stuff last week, like Friday, right? My last video on the proposal was on Thursday evening. They voted on Friday, but I do want to say now the House and the Senate must agree. Okay, the House and the Senate must agree on the bill, and right now that's scheduled to happen December 15th. Okay. Happy early birthday to me because that's really close to my birthday. So it's going to happen on December 15th. So we'll see. Maybe it'll be, well, of course it's going to be happy birthday because I'm focused on myself, right? And not the economy, my economy. So, but if these changes take place, and it's a pretty good chance that they will, if the changes take place, they will take effect January 1st. So this will not affect 2017 tax year. So that's really important to remember. So write that down if you guys are taking notes. It won't take effect until January 1st, and they are scheduled to vote the House and the Senate. They have to agree on the bill, and that's scheduled to happen December 15th. Okay, so we got a little bit of time. So what I want to go over, and thank you so much for the shares, millionaires. Thank you for the shares. I appreciate you guys so much. So what I want to go over is how it's going to affect the middle class. So I pulled out like the 6 biggest things that I think most of us can relate to, and how it will really affect us. So give me a number 1 on the Facebook Live. Give me a number 1 and a share. And can you guys believe, well, I'm like drinking this cup of coffee. I've been so tired all day. So it's my coffee. Give me a number 1 and a share. Give me a number 1 and a share, millionaires. Okay. The standard deduction is doubling. Now, the standard deduction is typically is $6,350 this year, and it's going to double to $12,700, and that's for a single person. If you are married and filing together, it's going from $12,000 to $24,000. So if somebody could put that in the comments for me, that the standard deduction is doubling. The standard deduction is doubling. So at first glance, okay, So that's number one. If somebody could put that in the comments for me, that the standard deduction is doubling. Now, at first glance, it seems like it's a really good thing, and it's going to be very, very beneficial to the middle class, right? That's how it seems. However, right, number two, give me a number two on the Facebook Live and a share. Give me a number two on the Facebook Live and a share. The personal exemption is being completely eliminated. Okay, we will no longer have a personal exemption. So for those of you that are familiar with filing your taxes, right, the personal exemption is around $4,000, right? So this year is $4,050. So if you guys are familiar with filing your taxes, the personal exemption, you used to get your standard deduction, right? And then it would go further to say, okay, now you have your standard deduction. Now, what are your personal exemptions? Okay, so you would get a personal exemption for you. You would get one for your spouse and as well as your dependents. So a family of four, right? That's an extra $1,600. So you would have like, it was $4,050, right? $4,050 per person. And then if you have four people, right? I'm sorry, if you have four people in your house, then you would have an extra $16,000 deduction, right? So you would have your $4,000 times the four people, like 2 kids, a spouse, and yourself. You would have your personal exemption, and then you would also have your standard deduction. So now that personal exemption is completely eliminated. So where they included where you were going to have a larger, right, they did increase the standard deduction. I don't want you guys to be kind of fooled, so to speak, into thinking like, oh my God, that's awesome. It's going to increase because the exemption is completely eliminated. So that can really affect people, especially when you live in a household with multiple dependents, you may even have like, and they don't always have to be kids, right? They can just be dependents that live in your house that you're taking care of. You have to have passed the relative test, they're living with you test, and you're taking care of them more than 50%, taking care of them of more than 50%, right, of their care. And then they can be your dependent. So just to recap, the first thing is that the standard deduction is doubling. However, the personal exemption is being completely eliminated. So it's no more personal exemption. So I wanted to point that out to you guys, and moving right along, right? And also feel free to, I do know I have a bit of a delay because I'm on the computer, but if you have any questions, you can always inbox me, right? Or just go ahead and post them in the comments and I can see them. But it just may be a bit of a delay. Okay, so number 3, give me a number 3. Give me a 3 on the Facebook Live and a share. Give me a 3 on the Facebook Live and a share. Millionaires. Number 3 is the child tax credit. Okay, so the child tax credit, a lot of people are familiar with the child tax credit, right? It's typically you have to have a kid 17 years or less, right? And you would get $1,000 in a refundable credit. Now, with those of you that are familiar with your taxes, right? When you get a refundable credit, that means that you get the money back regardless of your tax liability. Okay, so if you think about it like this, a lot of people that may not earn a lot of money, they get like earned income credit, and it's a credit, which means that it doesn't matter whether they have tax liability or not. It's added to their refund. So that's how you can have somebody that only makes maybe $20,000, but they get like a $5,000 or $6,000 tax refund. Okay, and that's because of a credit. So credits are typically refundable, right? So it doesn't matter if you have a tax liability or not. So number 3, the child tax credit is increasing from $1,000 to $2,000. Okay, now on the surface, it sounds pretty good. On the surface, it sounds pretty good. However, the catch is that that extra $1,000 is not refundable, millionaires. That extra $1,000 is not refundable, which means that if you do not have tax liability, you still getting the same $1,000. Okay, so where in the past, like I said, if you had, if you had somebody that's making, 30,000, 40,000, 50,000, whatever it is, you get the child tax credit that's added to your refund as opposed to deducting from your tax liability, right? So that's a huge difference, because you can make your tax liability 0 and then it's like, woo, thank God I don't owe, but you're going to want the money back. So typically when it comes to the middle class, a lot of us will get, earned income credit. A lot of us will get the child tax credit. But now, even though the child tax credit is doubling from $1,000 to $2,000, that second $1,000 is non-refundable. So it will only reduce your liability. So if you don't have a liability, you don't get it. Okay, so it's almost like a catch-22 where it sounds like it's really good, just like with the standard deduction, right? It sounds like it's really good, but it's really not that good, because you don't get that extra money just because. You aren't going to get that extra money. So please put that in the comments for me. Like, the additional $1,000 is not refundable, which means that it only reduces your tax liability. So I don't know how to put all of that in the comments, but just say that it's like a catch-22. So, better yet, this is how I can explain it. So let's say it's a person with making minimum wage, and they have 2 kids. They will not benefit from the additional child tax credit. They will not benefit from the additional child tax credit. They will only get the original $1,000, right? That's all that a person with 2 kids making minimum wage is going to get, that original $1,000. Now, on the other hand, so you guys can kind of understand what I'm saying, let's say it's a person making $495,000 and they have 2 kids. That person will get the credit, and the person with minimum wage will not get the credit. Okay, so I hope that makes sense, millionaires. Like I said, I'm always here to help. I know taxes sometimes is like, all this craziness, and you're like, what is going on? But I hope that makes sense. So just to recap, the child tax credit is increasing from $1,000 to $2,000, but the second $1,000, the additional $1,000 is not refundable. So you have to make a lot of money. You have to make a lot of money in order to benefit from that credit, because you will not get it. You will not get that money if you don't have any tax liability. Okay, so it will only reduce your tax liability. That's it. Number 4, give me a number 4 on the Facebook Live and a share. Good evening, millionaires. Give me a number 4 and a share. Give me a number 4 and a share, millionaires. Okay, number 4 and a share. This is another big one for the middle class, is itemized deductions, right? A lot of us, we get to write off like mortgage interest, right? You get to write off like the real estate taxes, the mortgage interest, the property taxes, all of that stuff. You get to write off state, local property taxes here in Chicago, Illinois, right? We have like Cook County tax, sales tax, and all these other taxes. Now, typically you get to write those off. So what happens is, when you go to file your taxes, the government will allow you the larger of your standard deduction or your itemized deduction. So a lot of people will itemize their deductions when you have a home and stuff like that, because you get to get a credit for all the different stuff that you have to pay for your house, right? All the interest on your mortgage, real estate, property, all those taxes, right? You get to get a credit for it. Now, I'm so sorry to report that that is going to be capped at $10,000. So what that means is that it's probably going to be more beneficial for you to just take the standard deduction, which is $12,000 if you're single, or $2,400 if, or $12,700 if you're single, $24,000 if you are married, right? So it'll probably be more beneficial for you to do that and whatnot. So what that means is that a lot of times regular people, you know, middle class, hardworking people, they get a huge tax break for paying so much in property taxes and real estate taxes. Now that tax break is going to be stopped at $10,000. So you won't be able to write off more than $10,000. So that's not that good, because now you're going to be stuck with only writing off $10,000. Okay? So itemized deductions, so all that stuff for interest and home equity loans and all that stuff that you used to be able to take advantage of and get a tax write-off for, now that's no longer. Or, you know, let's see what happens on December 15th, but it's no, you know, they are voting to get rid of that. That's part of the plan, and it seems like it's going to move forward, but I don't know. We'll see. I don't know. Okay. I'm in Chicago, not in DC. Okay, give me a number 5. Give me a number 5 on the Facebook Live and a share. Give me a number 5 and a share. And this is how you know. So now all this stuff, millionaires, is kind of just that I went through, like 1 through 4. Those are like the main things that I personally felt like will affect the average working person, the middle class person, right? A lot of people really rely on their itemized deductions. They don't mind paying extra for mortgage because they know they get a tax write-off. But now if you don't get a tax write-off and all you get is the equity in your home, you know, now people are going to say, okay, well, can I afford, right, to do this? Okay, people are going to be thinking like that. The child tax credit, right, is doubling, but you really don't get that extra $1,000, right? So it's doubling, but not doubling, right? The personal exemption completely eliminated, so that's gone. And then the standard deduction is doubling, but you're getting rid of the personal exemption. So for a family, a huge family, those personal exemptions being eliminated can really be effective. Now, for a single person like myself, I can benefit from having my standard deduction increased, right? Because now it's going from $6,350 to $12,700. But if you have 4 or 5 kids, right, and you don't get that extra $16,000 in deduction, then that's a huge difference, millionaires. That's a huge difference, $16,000, $20,000, because you don't have your personal exemption. Okay, so moving right along, number 5. Number 5, give me a number 5 and a share on the Facebook Live, a 5 and a share. The corporate tax is being reduced from 35% to 20%. So I saved these last 2 for last because I believe that all of the everything that's proposed is, I believe, is the government's way of saying that they want us to become business owners. Right now we have a businessman in office, right? We all know that Trump is like a businessman. That's what he's known for. And this is not bashing anything, you know. Believe it or not, when I was a kid, I wanted like the Trump game. I don't know if I don't think I ever got it. I don't know what happened to that, but he had a game, right? He had a board game, and I wanted that board game so bad. So I'm not even talking about, you know, Republican, Democrat, blah, blah. I'm just saying this is what it is, okay? This is what it is. And I believe that the government is pushing everybody towards becoming business owners. So the corporate tax rate, number 5 is the corporate tax rate is going from 35% to 20%. So where corporations used to be taxed outside of everything that they get to write off, right, outside of everything that they get to write off and have as a tax deduction, they were taxed at 35%. Now they are being taxed at 20%, okay, or once it becomes law, right? It's going to be at 20%. So that's a huge decrease for business owners, right? That's a huge decrease in taxes for business owners. So that was a big one. And last and definitely not least, give me a number 6. Give me a number 6 and a share, millionaires. Number 6 and a share. Give me a 6 and a share. Corporations are also going to get tax breaks for automation. Okay, so now this tax break, it used to be for technology and machinery, right? But it was more so machinery for factory workers. It was kind of like the Get America Working Again, and Buy America and all of that stuff, Go USA, right? It was part of all of that. It was part of all of that where the government was giving tax breaks for corporations to get different machines, right, and stuff like that to help workers and stuff like that. So what's going to happen now, though, the way that the economy is going and the way that technology is going, is that these machines are going to replace workers, and the government, I'm sorry, and the corporations are still going to be able to write this stuff off, right? So it's like, the thing that I want you guys to think about is that if you get a tax break for getting machines, right, robots, right, but then robots don't need breaks, robots don't need benefits, right, and stuff like that. So robots can literally work all night. So what's going to happen is that they can go from getting these same tax breaks and having everything written off on their taxes, and it's not going to affect them not one bit. Okay, so those are the main things that that I saw with the tax bill that is they are going to vote on it December 15th. So we'll see what happens, right? But definitely feel free to ask me any questions and stuff like that. And so I really do feel like this reform screams, right? If it doesn't scream anything else, it screams at the top of its lungs, start a business, start a business, start a business. And that's one of the things that that I personally always even talk about. You really want to have a home-based business is really the way for the average person to be able to compete with this type of stuff. Okay, so if anybody has any questions with starting a home-based business, definitely feel free to reach out to me or reach out to whoever shared the video with you. I'm always here to help. Okay, I see a couple questions. Okay, so Shayna, head of household, they didn't say anything about head of household, right? So they said standard, single, and married. Okay, so I'm not sure about the head of household. No, cannot write off that bag tax, Yeshua. No, they're not letting us write off that bag tax that they charge us here in Chicago. And it's crazy. And they have everybody going to the, we be walking out the grocery store with like 15 items. Anybody that's in Chicago could definitely relate, because they have us paying taxes on bags when you go to the grocery store. And the killer thing about that is that it's tax on top of tax, because that 7 cents that they charge us per bag is above the tax line, right? So that means that we get charged 7 cents almost like it's an item, right? But they call it a tax, but it's technically an item that they charge us 7 cents per bag. And then we have to pay sales tax on top of that, Cook County tax on top of that. So it's like, it's a catch-22. So no, sorry. Yeah, Kevin, they will not let us write that off. But I know I can think of a way. I can think of a way. So, okay, millionaires, I'm going to go ahead and get out of here. Definitely, if you guys have any questions, just feel free to reach out. I'm always here to help. My name is Amma the CPA. It's not important to me. Like I said, it's not important to me how you make your living, but it's important to me what you do with it, and that's your life. That's what's important to me. So reach out to me if I can help you in any type of way. If you have any questions about this or anything that I went over. Okay, millionaires. Good evening, millionaires. And I will see you guys tomorrow. Tomorrow night, I'm talking about what is good credit, right? What is good credit? A lot of times we talk about, we go over like, oh, good credit, bad credit, and stuff like that. But I want to go over tomorrow what good credit is. Okay, so I'll be here tomorrow evening at 7 Central, 8 Eastern. Good evening, millionaires. Amma the CPA. Talk to you soon.